Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the medium time frame with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside, and after the green 5 we expect a bigger corrective structure to the downside. Now to the upside we still have some interesting resistance as well, and currently the highs that we have on my chart here did not really hit any significant resistance, so it's quite interesting to see price rejecting here just below a couple of actually interesting resistance areas that also include volume levels, and that is always what I enjoy looking for. So the golden box over here, 45.2, 46k, then 47.2, 47.5, then we have 48.8 to 49k, and eventually we get into the 50k area. Now when we zoom in to this final leg to the upside in wave 5, then this is the count that we are looking for, the yellow count here, and then a wave 1, 2, 3, 4, and eventually another impulse to the upside in then a wave 5. But what is important for this wave 4 is that we don't want to see the 0.618 touched at 39.9k, as that would invalidate a wave 4. You can see that on the 4-hour chart we also closed some candles below the 0.5, which is not ideal. Arguably here on the 6-hour we only have a couple of wicks, but it is something we have to keep our eyes on. Wave 3 here went to the 2.618, common target for wave 3, taken from the low to the high of 1 to the low of wave 2. And I do realize that on other charts this wick over here took the high of the wick on the left, but on my chart I somehow have this random wick over here. But that makes this chart quite interesting because of the volume on my chart, because if we are looking for this to be a wave 3 to the upside, and this wick in my case has the highest amount of volume, it would usually increase the probabilities for this to be a wave 4 and 5, because you want to end an impulsive structure on lower volume, make another high and then a lower low on the volume. Of course, on other charts, this high over here is actually the higher high where you don't have this random wick, and on those charts you do have a lower low on volume. But here on the Coinbase chart that I am using, that is not the case, which therefore makes it very interesting to potentially still look for that wave 5 to the upside. It's basically a little bit of extra confluence for potentially another wave 5 to come. If we look at the bearish scenario, then we are looking for a finished 5-wave impulsive structure. The end is in, and we are now looking for a bigger corrective structure to the downside. The final impulse can then be counted over here as a 1, 2, 3, 4, 5, or arguably 1, 2, 3, 4, and then a wave 5. And if we go to the 1-hour chart, then the end can be counted like this. Now it's not too pretty per se, but this is what we've done on the live stream yesterday, where you want to end an impulse, of course, with a 5-wave structure, right? Wave 5 and wave 5 here have to end as an impulsive structure. So in this case, this over here has to be your wave 4 corrective structure, and then we have here a wave 1, very long wave 2 retracing to the golden pocket, and then a WXY flat X flat over here. Then you have your wave 3, your corrective 4, and then your final leg to the upside in a wave 5, giving you this impulsive structure to the upside here, ending wave 5, and then you get the beginning of a corrective move towards the downside. Now arguably there is overlap between wave 1 and 4. That's also not what you like to see. If this is the high of your wave 1 over here, and this is the high of your wave 3, then this range here is your wave 4. And in a normal impulsive structure, 1, 2, 3, 4, 5, you don't want to see overlap between the low of 4 and the high of wave 1. Else you have to think about diagonals, but we can't really get a nice diagonal in here. So for me, this would be the only potential idea to finish an impulse over here, right? Now if we zoom into the lower time frame, and that is then the bearish scenario, right, where the high is in and we are looking to the downside, then we could be looking for a 5-wave impulsive structure to the downside, where we then have a 1, 2, 3, 4, eventually wave 5, possibly in, end of a 1. Eventually we're looking then for a retracement to the upside. Currently the fibs are taken from the high to the low. Common target area is 0.5 to the 786, which is 42.4k to 43.8k. Now also you have now a gap over here. As you can see, potentially price can test this gap over here around the 05, get a first rejection, but the moment you then come back, start to close candles in this gap, probabilities are high, you're going to move to the upside, close the gap, so that the 786 becomes an interesting target as well, also because of the point of control that we have of this range over here also being around this level. If we look at this order block over here, this is a 12-hour order block. It was for a short period of time a little bit of support, now acting as resistance. And it's quite an important one. It divides the chart between over here the upper section and of course the lower section. Little bit of support, and now it's simply resistance. Simple support resistance flip here. So you definitely want to see this area pass towards the upside. We do have some news coming today as well, 2:30 p.m. Central European Time. The red flags here. We have some high impact news coming, so make sure you trade safe because it can increase the volatility to either the down or the upside, right? That's something we have to wait and see. It's all probabilities. We also have some CVD divergences with the lows that we have over here. Higher low in price, lower low on the CVD. And that's another thing that I think is quite interesting. At the moment, so far, we have not seen any big bearish CVD divergences locally. Now, the divergences on the right side of the most recent high are most important. The more local CVD divergences are most important. But we have not seen any big bearish CVD divergences building over here after the high, whatever that is, whichever that is, on your chart. We have only seen very, very small bearish CVD divergence here, but nothing big like a low or like a low made a retracement bearish CVD between the two highs here, for example. So arguably we have to keep an eye on the retracement here and potential bearish CVDs, but we also have the bullish one here still active with the lows we have over here. So let's see what happens locally, as the local CVD divergences are most important. If we do then look at the probabilities, then on the medium time frame and the low time frame, still slightly bullish, looking for price to move to the upside based on the explanation of the different scenarios, and also with CVD, we're still looking for then another 5 to the upside, as well as then the low of a wave of 4, and potentially here a flat structure, and then an A, B, and then a wave C to the downside, 1, 2, 3, 4, 5. Then looking for another impulse to the upside. Of course, we could expect price to potentially just range inside this area. Keep an eye on the 0.618, because if this one is hit over here, an impulse to the upside becomes invalidated locally, and we can potentially then look for lower prices to come, or at least a bigger corrective structure before then, arguably in the bullish scenario, continuation. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.